Trading numbers for a single digital asset are at levels that have never been seen before. Liquidity pools are getting thin and exchanges are, taking emergency steps to deal with all this demand. The speed and size of this adoption event really show how powerful combined central bank action can be. The market surge that followed shows how digital assets can, spark big changes in the world's finances. Every exchange order, trade, and wallet filling is part of a wave that is changing the world of money right now. Analysts think that the event will have effects on almost all types of assets, even right now. As a result of XRP's unprecedented rise, stock markets, commodities, and standard currencies are all going through secondary changes. Hedge funds are reevaluating their exposure to options, foreign exchange markets are readjusting liquidity, and private equity firms are reevaluating what this means for how capital is allocated around the world. We're not just seeing a price spike here. As a result of coordinated institutional acceptance and strong market demand, this is a complete reorganization of the world's financial infrastructure. It's amazing how big the market response was. The amount of trading in a single digital asset is hitting levels that have never been seen before. Liquidity pools are getting thin, and markets are taking emergency steps to meet demand. The speed and size of this acceptance event show how powerful it can be when central banks work together. The subsequent market rise shows that digital assets have the power to cause huge changes in the world's finances. Every exchange order, trade, and wallet filling is part of a wave that is changing the world of money right now. Analysts think that the event will have effects on almost all types of assets, even right now. As a result of XRP's unprecedented rise, secondary changes are happening in the stock market, commodities, and standard currencies. Hedge funds are reevaluating their exposure to options. Foreign exchange markets are readjusting liquidity, and private equity firms are reevaluating what this means for how capital is allocated around the world. This isn't just a price increase, it's a complete reorganization of the world's financial system caused by widespread acceptance by institutions and high demand on the market. People who have held XRP for a long time are enjoying gains that have changed their lives. Retail investors are sharing screenshots of their newly valued portfolios, and institutional traders are keeping records of trading activity that has never been seen before. There is a lot of talk, speculation, and strategy going on in investor groups, social media, and news outlets right now about one of the most dramatic events in the history of the stock market. The $25,000 mark is more than just a number. It marks a turning point in the history of digital money. A historic milestone that confirms years of innovation, adoption, and belief in the potential of blockchain technology. The global community is still processing this important event, but the long-term effects are becoming clearer. When central banks all agree to use XRP, it means that the way foreign payments are made will change fundamentally. Because of this, market dynamics, price growth, demand for liquidity, and huge flows of capital are changing both traditional and digital financial environments. The $25,000 mark is both a sign and a spark that shows how digital assets have the power to change the way global finance works on a large scale. In conclusion, XRP's overnight rise to $25,000 is more than just a market event. It is a historic financial event caused by central banks working together to accept it. Exchanges, investors, regulators, and experts are all seeing the start of a new era. This is due to unprecedented buying pressure and a systemic realignment of the global financial infrastructure. In this world, you wake up because XRP just went through the roof at $25,000 while everyone else was sleeping. This has huge historical implications. The charts lit up like never before on all of the big exchanges, from New York to Tokyo, London to Singapore. This showed a level of buying pressure that not many people have ever seen. Traders, investors, and institutions are trying to figure out what happened overnight. The reason is very strange. 47 central banks from around the world announced together that XRP will now be used as the main way to settle foreign transactions. There is no doubt that XRP is the most important thing in a huge shift in the way the world's money is handled. This is not fantasy, it is not hype, and it is not a pump. As soon as the news came out, the financial markets went into chaos. Exchanges are reporting system slowdowns in volumes that have never been seen before as both individual investors and large companies try to get positions in XRP. Wallet deposits have gone through the roof. Liquidity pools are under a lot of stress. And high-frequency trading systems are having to change how they work in the middle of a trade to handle this huge influx of capital. Analysts who usually make timid predictions are rushing to make changes to their models in real time because they know that the market reaction is unlike anything that has ever happened in the history of cryptocurrencies. The $25,000 mark wasn't reached slowly, it was a quick, explosive jump. This shows that most people around the world agree on XRP's new role in finance. The coordinated central bank statement is the most important thing that led to this historic shift. 47 institutions from different continents and economic systems agreed that XRP would be used for cross-border payments at the same time. This decision by everyone is an unprecedented alignment of monetary policy and the infrastructure for digital assets. It also marks a paradigm change in how global trade and finance will be done in the future. After that, there was instant buying pressure, orders flooded the markets, automated systems processed deals worth billions of dollars in seconds, and every exchange that could handle XRP started experiencing short-term outages due to the sheer volume. We are not just seeing changes in prices, we are seeing a basic reorganization of the way the world's financial system works in real time. There is a mild amount of confusion on the trading floors. Brokers and big-time traders are rushing to keep track of their accounts. Hedge funds are quickly recalculating risk, and analysts are having emergency briefings to figure out how this will affect the foreign exchange, derivatives, and liquidity markets as a whole. In major financial centers, screens keep flashing green to show the $25,000 jump, and real-time charts show vertical climbs that honestly don't make sense based on past technical studies. This is an event that will be taught in finance classes for decades to come because of how institutional acceptance, global coordination, and the infrastructure for digital assets all came together to make it a truly historic financial event. Aside from the instant price increase, the effects on the economy as a whole are, well, shocking. As of now, 47 central banks have officially added XRP to their cross-border settlement systems. This means that standard payment methods like SWIFT are now up against some pretty tough competition. Settlements for international trade, foreign exchange operations, and moves between banks are all being changed to take into account XRP's speed, efficiency, and lower costs. As you know, the effects go all the way to monetary policy. Now, when governments plan economic interventions, they have to think about the security and liquidity of digital assets. Analysts already think that this adoption will have an impact on global capital flows worth trillions of dollars, which will have a ripple effect that really. At the same time, new people are rushing to get in on what is being called the biggest wealth transfer in modern financial history. There is a lot of excitement, speculation, and real-time analysis going on in the investor groups on trading floors, social media sites, and live streams. A lot of people are sharing screenshots, video feeds, and transaction alerts that show how amazed, happy, and, to be honest, shocked people are as their wallets and portfolios hit levels that no one thought possible. The technical side of this rise is really interesting. As people in the market react to instructions from the central bank, blockchain analytics show huge coordinated flows into exchanges, groups of high-volume transactions, and wallet activity that has never been seen before. Cross-chain settlement methods, liquidity management protocols, and smart contract infrastructure are all working at full speed.